third quarter GDP has been revised higher, showing the economy expanded by 2.1% compared to an initial estimate of 1.5%. Let's bring in David Lebovitz, global market strategist at JP Morgan Asset Management. And David, help us make sense of this in terms of the health of the economy and what it means for a possible rate hike from the Federal Reserve in December.
So the first thing I would say is part of the reason that GDP was revised upward was due to a little bit less of an inventory build than was expected in the third quarter. So we're giving back a little bit of fourth quarter growth. We expect that the inventory runoff is going to take a little bit longer than we initially expected. But I think the key to this report was the strength that we continue to see on the consumer side. Consumption looked very robust, expanding at an annual rate of 3%. And that's down a little bit from the prior quarter. But again, the consumer is looking very healthy. And I would expect that as we see a little bit of wage growth, we're going to see that inflation the Fed's been looking for, making them more comfortable to hike rates.
And of course, the markets are still pricing in a 74% chance of a December liftoff.
Yes. And, that's basically in line with what we're thinking. So we think 75% chance the Fed goes in December. This is a Federal Reserve that wants to hike interest rates. And furthermore, if you just forecast inflation out a little bit to March of next year, our models are suggesting that inflation could hit a rate of 2% by March 2016. That's essentially in line with the Fed's target. So the Fed needs to think a little bit about where the economy is heading and adjust monetary policy accordingly.
All right, but as you and I have talked about, a lot of things can happen from now until the Fed's December meeting, including a weak November jobs report. Of course, we'll get that next week. And falling oil prices. Of course, we're seeing a lot of tension in the Middle East.
Yep, absolutely. And it's important to always be cognizant of the geopolitical risks. I think that the risks in the Middle East are underappreciated right now. The very low price of oil has masked them to an extent. But, volatility in oil markets, a weak November payrolls report, those are all things that could keep the Fed at bay at the December meeting. That being said, we do think that they will hike rates before the end of the year. This is a Fed that wants to hike rates. And I think that if they're given the opportunity, they'll go ahead and do so.
All right. Now, the other force, though, that could threaten a December rate hike is the strength of the dollar. I mean, this isn't a new story, but the dollar strength is essentially a natural form of Fed tightening, so to speak.
Exactly. And, when the Fed says they're data dependent, what that means to me is that they're really dollar dependent. You need to watch the dollar very closely. A 10% move in the trade weighted dollar equates to about 100 basis points of Fed tightening. So for every 10% move, it's like the Fed has hiked rates 1%. So a stronger dollar is going to limit the ability of the Fed to get rates higher. But we do think that the pace of appreciation in the dollar will be more modest going forward, giving the Fed the wiggle room that they need to get monetary policy back towards normal.
All right. And final question, is it just the strength of the dollar, or do we need to see the dollar reach parity with the euro? And of course, if that happens before the Fed's next meeting, I mean, where does that put the Fed? Of course, we're expecting more ECB stimulus in early December when the ECB meets.
So we are looking for more ECB stimulus, and I wouldn't be surprised to see the dollar appreciate against the euro if they do more in December. I think the key thing to remember is that currency markets are very forward-looking. A lot gets priced in before news is actually announced. So I almost wonder if some of the strength we've seen recently is a little bit of buy the rumor and sell the news. We think that while the dollar could strengthen in the wake of an ECB announcement, the jury's really still out as to what the dollar will do when the Fed announces that they're going to hike rates sometime in hopefully the not-too-distant future.
All right, David. We'll be watching. David Lebovitz from JP Morgan Asset Management. David, thank you.
Thanks for having me.
I'm Scott Gamm, and you're watching The Street.